is an update and technical analysis on Bitcoin cryptocurrency here off the daily interval. And I had previously stated in my 18th of March 2023 video, we were trading spot price 27,320. Key inflection points watch was the 28,891 price resistance, coinciding with the 236 fibs retracement at 28,231. Especially ideally for any pullback traders, quick in and out day traders. Really focus the sole attention amongst that 28,891 price resistance immediately after following this breakout above this key primary trading range that we had, which was really bullish, and that is a breakout, no doubt. And I favored some sort of pullback, maybe even a quarter, halfway pullback, and then a splash up above there. But we'll see if we even get that reaction. Here is the updated version here, and we'll kind of zoom in here on the daily interval. And it has been rejected amongst each other about 5 days in a row there, where we had a one backtest rejection, a second day backtest rejection, a third day again backtest rejection, backtest another rejection, and again right there for that fifth or sixth day, another rejection there, offering him an aggressive, more aggressive entry short trade setup, especially if you're a day trader, active and or quick day trader. You're looking at 7.9% drop, another back test down for another 7.9% drop, another one here. Just quick little ins and outs if you're a quick and or active trader. But as far as the bullish case scenario, they need bull traders, dip buyers. They need to break out of this. They need to stop clustering up and consolidate in the consolidation phase here. So it looks like a definitely more of an island cluster top here, where you have a cluster of a trading range. And then what happens is you'll snap its neckline of support there, and it's usually a very powerful move to the downside, what they call an island cluster top. Bull traders, long traders, dip buyers, long-term investors, they want to see a potential flagging action if it has any sort of that look of a formation on a complete breakout. That 28,891 has been heavily respected the last few weeks, and so a breakout above would be exceedingly bullish, and probably a quicker move up to that 31 marching up to that 31,914 price resistance there. And if it is a potential flag, you're talking about some pretty big key levels up here, hitting some of these key inflection points, where if it is turning into a bull flag, bullish continuation pattern, you're talking about another 48% in gains to the upside, which would perfectly align to the 39877 price resistance. Well, that's two separate scenarios that could play out there. But again, the risk-reward ratio is skewed to the downside, in favor of the downside for some of these key targeting range. Risk-reward ratio is just not there for the long side entry. Of course, if you're a FOMO trader and or a quick active trader, some of these key levels, if broken out amongst, could be definitely traded there. So we'll see what happens. As far as any pullbacks, is what I would like to favor a potential uptrend swing trade, going back to that 21,453 price support there, maybe initial reaction, and then that primary uptrend line needs to be defended really at all costs there for any long-term investors. Short sellers, of course, bear traders want to see a breakdown below that key inflection point, coinciding with the 21,453 price support and 200-day moving average hovering down below, call it a triple line of inflection points, and they want to see that taken out for a big move to the downside there. We'll zoom in now to the 240-minute interval, where we have a very similar pattern and structures here. Bearish continuation, divergent highs, negative bearish divergences that have just really continued to construct. Very similar looking pattern here, where we had a breakdown sell signal, and that was a pretty decent move to the downside of that 21,453 price support, where we have something very similar. Again, same structure, same divergent high, continuous bearish and negative bearish divergences, where we have completely snapped this minor uptrend line here now. That has officially been back tested one time, two, three times here, and we've split the 50 240 minute interval, 50 moving average, on a breakdown below that 2831 price resistance there. So we'll see if this has a next move to the downside. First target still being the 24,875 price support, if anything, where the risk-reward ratio lies heavily to the downside. At least catch that 240 minute moving average for a 7% drop, down to 24,875 for a 10.8% drop, down to 24,191 for a 13.5% crash, down to 23,13 for a 16.8% crash, down to 22,400 for a 20% crash, and then ultimately, if things get real bad, 26.96 down there for a 26% crash, And then the mother of all inflection points that I've been talking about for almost every video I've ever uh, conducted when it comes to Bitcoin is the 18332 236 fibs weekly fibs resistance there for 35% crash off this primary hidden uptrend line there. So I'd love to see something like that, but it's a big long way down, and usually you end up going up in an escalator, and you have sort of these choppy momentum uptrends versus a full blown elevator to the downside, and how quickly stocks and or crypto currency can move to the downside.